What's up, everyone? It's Rey-Jay back with another video. And in this one, I want to talk about the overall market and break down some very important factors affecting us. I'm going to break down some big things that are going on in terms of the level that we are at on ES, on SPY, and the QQQ, and then break down what this means for the market going forward. But let me just mention that I am not a financial planner. Make sure you take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire community as a whole. So I just want to talk to you guys about what's happening with the market right now. We're seeing a lot of crazy things going on all over the world affecting it. The first thing that's worth mentioning is the fact that there's a lot of negative data coming out. On Thursday, we got the manufacturing numbers. They were not too good, showing some weakness in that sector that started this sell off in the markets. And then the sell off continued as we approached Friday because the unemployment numbers were once again below expectations. So the unemployment numbers were very, very weak. They were suggesting that there's weakness in the economy right now, and unemployment is once again going up. We're starting to see a lot more of an increase that's higher than what a lot of analysts were expecting, and this is leading to a lot of fears amongst investors about the US entering a recession. Now, on Monday, we have another big factor coming out. We have the ISM services data, we have business activity, employment, new orders, and such. On Thursday, we had the manufacturing sector announce things that caused the market to dip. So on Monday, with the services data coming out, will this cause the same thing? We'll just have to watch and see. Now, other things are going on involving the Fed. Right now, the market thinks the Fed is going to most likely give us a cut, at least for September. That's most likely going to be the case if we get good data from here on out. If we keep getting low inflation numbers and such, then yes, this will most likely be the case. If not, things could shift, so we'll just have to wait and see. But notice that the election is coming up, and I wouldn't be surprised if the Fed gives us just one cut approaching the election. Now, I just want to note that, you know, with everything that's going on, even if the Fed gives us one cut, that does not mean the economy is just going to be saved, everything's going to be fine. That does not mean that whatsoever. And I say that because when it comes to interest rates, they have a very, very important lagging effect on the economy. And interest rates are still going to be high. Even if they give us one cut, they're still going to remain high, even going into like November, December, the end of the year. So these high interest rates are still affecting the economy, which is why we're starting to see businesses slowing. We're seeing businesses slowing. We're seeing a slowdown in earnings. Look at how many earnings missed during this quarter compared to the previous one. Look at what's happening with manufacturing and possibly other sectors. Look at unemployment that's going up. Americans are struggling. Americans are going through some hardships right now. And things are not going to get easier. There's going to be a lot more coming, especially as many indicators are showing that we're entering a recession. This isn't a guarantee that we're officially in one. This is just another indicator that suggests that we are entering a recessionary environment, and the odds of that are becoming much higher than what many people were expecting. This is the opposite of what Jerome Powell was saying. Hell kept preaching that everything's okay, don't worry. But the Feds did the same thing for decades, and there have been many instances where they did not end up telling the truth. So I just want to say that there's going to be hardships, guys, and I really have a lot of sympathy for people out there who end up losing their jobs, for people that struggle, hardworking Americans who end up getting into debt. It's difficult. I understand, the pain you're going through, and all I can say is that I hope for the best for everyone, just to stay strong through everything and to never give up no matter what happens, because I know there's going to be hardships coming. So that's what's really affecting the market, all this negative data and such. And then we also have this news right here. We're seeing the US getting involved in another situation in the Middle East. Sadly, innocent lives will pay the biggest price when things like this happen. So I hope that there's no retaliation. I hope that there's no more war escalation. I hope that this doesn't continue like this. But there are a lot of threats and a lot of risks of that happening, and this could be very, very insane. So it's going to have a big effect on the U.S. economy. It's going to have a big effect on economies all over the world. And we have to be very careful when wars like this break out. The initial reaction could be very, very big, and that's something I can't really predict because at any given moment something could happen. At the time I'm recording this, there's not really anything that's been reported, but I just want to say that if there is an escalation, it's not going to be good, and I think the market could get a negative reaction initially. So we'll just have to wait and see. So, anyways, going back to ES, okay, and ES is very, very important. This is the SP500 E mini futures. This is at a previous resistance becoming support. This is very close to our zero point 0.5 retracement area on the 5350 area. And if we were to lose this, the 5340 area, there's going to be a risk of a bigger dip all the way down to the 5200. So I want to give you guys a warning about that. This also resembles a head and shoulder like structure, so that could suggest more downside is imminent. But in order for us to get a breakout, we need to hold above this trend line and continue to hold above it for at least a couple of days. There's no sign of that, so the trend is still weak, but we're just barely at support right now. So we'll just have to see how that ends up developing. Going back, I'm going to pull up a horizontal line just to show you. So we have this support. We will see if ES holds this or not. We're barely at this level. Whether this holds depends on the services data. It depends on many different factors. I am seeing some buyers trying to defend it right now, so I wouldn't be surprised if we try to push a little bit on Monday morning. But then we'll see if this is another pop and drop. This happened many times where he kind of like popped and then rejected, popped and then rejected, popped and then rejected. We'll see if it's another pop and rejection or if we just continue to go. But I think we're going to pop a little bit, and there might be a risk of rejection based off this trend. We've been downtrending for many weeks now. There's no sign of a true bounce, no sign of a true breakout, so we will have to wait and see. But if we do get a little rebound on Monday, we'll see if we get a big rejection because of the services data, and also be very, very careful because of what's happening with the Middle East. We want to be very mindful of all of that. This pattern is also more bearish, so just be very careful with this. I see something very similar on Apple stock as well. Sadly, Apple, despite doing well for earnings, Apple only pushed temporarily, only to get a big rejection. So that's kind of sad to see. If you look at Apple, I have it right here on my watch list. I was just looking for it. Um, it's a similar structure. It has a head and shoulders. This is what's part of the algorithms that are dictating the markets. Apple's going to be fine unless we lose our 200 EMA. If Apple loses 212, this will drag the market even lower. So you want to be careful with Apple to see if we hold this. We also have 222 as resistance, so just be careful. There's this head and shoulders. This could lead to a bigger drop. If 212 ends up breaking on Apple going into next week, the market's going to get dragged down. It's going to probably have a big effect on us. So you want to be very careful. The risk on Apple is just head and shoulders. So we will see if we get some kind of rejection or not. We were only up 0.69% despite having good earnings. So it is what it is, guys. The Chinese sales are still not the strongest for Apple. I would still be careful with that, especially as things are slowing in the economies around the world. And then for SPY, I know a lot of people trade SPY. We have a head and shoulders as well. And I also want to just call out that we're testing this previous resistance becoming support. So it's basically around this 528 area. So right about here, we have this previous resistance zone that's becoming support. This is where SPY is trying to hold up. And then 528, I called that out because of the weekly. The weekly also shows that 528 is a key zone. So, in my opinion, we're going to be looking for a big test. If we lose 528, we're going to easily start falling to the lower 520s and then even much lower levels. If we hold 528, we could try to rebound. In order for us to really bounce, you want to see us break past 536. So we'll just have to see if that ends up being the case. But right now, if I'm going to be 100% blunt, we look bearish. We look bearish right now. There's no sign of a true bounce. So I'd be very careful with this, especially as we're just barely holding support. I see a head and shoulders like structure. The full measured move comes if we end up losing this 528 area. It would take us all the way down to about this 520 zone. So there is a risk of us dipping lower, even on SPY, if we end up losing this key support. And that's just a minor support. That's not a super strong support. The super strong support is going to be closer to 500. But just know that there is still risk of downside in this market. I'm not seeing any sign of a true bounce quite yet. So we'll see. I think on Monday, if we do possibly rebound a little bit, so long as there's no like massive attack or anything like that, we could rebound a little bit, and then we'll see if we could reclaim 536 or not. If we come short, we could still reject, just like what I was saying about ES, how we kind of like popped and rejected, popped and rejected. We could pop again, then reject. If we close above 536, we could rebound, but just be careful. I'm going to be very patient. We kind of have a slanted head and shoulders like structure on the QQQ. If you look at this, the full measured move would take us all the way down. We actually reached it at 544, but notice that we touched 544 as critical support. I would say 544 to 546, and we weren't able to get a true bounce just yet. We haven't truly bounced. We got to hold this support near by 444. Excuse me, I think I said 544. I meant 444. If we do rebound, we got to get back above 452. If we don't do that, we could continue to sink. And as of right now, every time we just pop, we just get rejected. So it happened like 4 or 5 times. We popped and rejected, popped and rejected, popped and rejected, popped and rejected. So not looking too good on the QQQ. So just be very mindful of that and be very, very careful. For something else like Tesla, I went over this in another video, but just note that as far as Tesla goes, um, from what I see, we have a very symmetrical structure. And if we do make a symmetrical move, notice how symmetrical this looks. So that means it's like a mirror image. The left side looks like the right side, okay? And then if you take this support around this 194 areas where Tesla had resistance and support, it's a very, very interesting support. If Tesla continues to decline, we could be dipping towards 194. It's possible, but I think the better thing to do is just to draw out like a flag. I think that this is what Tesla's respecting. So if you look at this support like this is going to be our resistance trend line, and then we have our support right over here. We'll have to see how well this holds up, but we're basically respecting this line. We'll see if Tesla dips more and just continues to shuffle like this. And in order to break out, you want to break this upper line right here to see that breakout. There's no sign of that yet, but it is possible we do get a breakout later on, maybe like next within a few weeks, because this is still very symmetrical, the structure. And I have a feeling that this might remain symmetrical. So this could suggest Tesla dips a little bit more. But once we hit our critical support, we rebound and get the breakout. We need to see a breakout for confirmation. There's no confirmation yet. So we'll see how things go for Tesla. But I think that that's it for my video. There's still a lot of weakness in the market. If you look at Bitcoin, we're still dumping. And Bitcoin had this bearish divergence. You guys can see this on the MACD. And if we don't, it depends if we could hold 60,000 or not. If we don't hold this, I think we easily fall to about 59,000 and then even well below that. So I'm still seeing weakness in Bitcoin. There's no sign of a bounce. That's not a great sign. Bitcoin's been dumping it with the market. So it's a very, very similar trend. So what do I see for the markets? We look bearish, plain and simple. Is this a stock market crash? No, we can't say that quite yet. Okay. I mean, it doesn't matter if you label something a pullback or a crash. Yes and no. I mean, at the end of the day, guys, the market will recover. We're going to be completely fine. It's not going to take forever to recover. The market was just at all-time highs just a few weeks ago, and just know that it's not the end of the world. Okay, the market will recover. Don't forget the election is coming up. We're just waiting to see when the market bottoms. So as of right now, this looks like a correction in the market. I would say a correction is the best word to use. I wouldn't call this a true crash. This is not like a 2022 styled crash or a 2020 styled crash. It's not like that so far. Could we develop into a crash? It is possible if there is something huge that happens. The market gets a massive dump, a big dump, like something big compared to what we've seen in history. Remember, we're not that far from all-time highs. SPY is only like about 30 points away. It's not that massive. If we're down like 10%, 15%, then yes, we'd be resembling a crash. We're not quite there yet, so it's too early to say if this is truly like a crash. It looks more like a corrective phase to me, and I think that there's still hope and potential for this to rebound later. We just have to wait and see what happens with external factors. As of right now, the majority of factors are more bearish, and they do suggest that there is more downside potentially coming. But that does not mean that the market is done for. It does not mean the market is just going to enter a crash or anything like that. I don't think I would consider it this. And I also don't really focus too much on those words if it's a crash or a pullback. I just like to play the charts, especially on a day to day basis when scalping. I just want to prioritize that, not really worry. So, is it a crash or a pullback? As of right now, it's more like a pullback, more like a correction phase, but it's not really a massive crash like that of 2008, 2020, or even like 2022. It's not really like that. I don't consider it that. And eventually, things are going to be completely fine. So, for now, that's my view as of right now. My view could change if something else happens in the economy and the world events. If there's a new pandemic, who knows? My view could change. But as of right now, I just want to say I don't see this as a crash. I see this as more of a corrective phase. All right. So, with that being said, I want to thank you all so much for listening. Please have a great day. Enjoy your weekend. And we'll see what happens with all these external factors affecting the markets. Remember the levels I called out. Even though the charts are looking more bearish, we'll see if we end up holding some key supports. And if we don't, it's going to be fine. We have the next levels coming up. So just be mindful of that. Do what you have to do, guys. I'll see you guys very soon tomorrow to do a more in-depth update for what I predict to happen for Monday. I'll release a video where I talk about AMD, Nvidia, and all the others for my video tomorrow. So be on the lookout for that. Until then, thank you for listening. Have a great day and peace out.